Good afternoon, everyone, and welcome to the Fiscal Philosophy YouTube channel. Uber is a stock that is holding up relatively well here year to date in 2025. In fact, it's, as of today, up over 20% on the year. Granted, it has been a little bit lumpy. There have been some peaks and some valleys, as you can see in the share price. Last week, I even made a video on 3 stocks that I had that I thought were holding up best in my portfolio for this year, and I didn't include Uber. Now, that actually may have more been maybe an oversight, though maybe the day I was working on the video, it was in one of those little valleys, and so maybe on the year to date, it didn't look as good on that specific day. But I do think it was a little bit of an oversight not to talk about Uber in that video. So I'm rectifying that today by talking a little bit about why Uber may be doing a little bit better than some other businesses in this present uncertain and on again, off again, flirting with tariffs environment. So first and foremost, I think that valuation metrics definitely play into it. What other large cap tech are you getting for a low 20s multiple of price to free cash flow? And when it hits some of these price dips, like if the stock price drops 10% or something, we're looking at what, like a 19 or 20 times maybe price to free cash flow, which again, that's relatively cheap when you compare it to a lot of the other large cap tech companies that have like a lot more capex, etc. Uber, a lot more of the money that they bring in is making it down to that free cash flow versus getting eaten up by capex, like with an Amazon or something like that. So definitely, I think, the market tends to favor cash flow above most other things in these kind of uncertain times. The other thing I think it's also worth noting is there's not really like a direct tariff on hailing a ride, right? So there's not like a physical product being imported with which to tariff. And at the same time, they are also very well internationally diversified. So if tariffs get really bad between the US and say some other random country out there, and those economies, have like some kind of a recession, if it's not a global recession, all the other countries that maybe aren't as badly effective sort of insulate it or make up for it a little bit, right? So you have that going for you. And I think that Uber just has, they have a lot of good things going for them. They have a pretty good flywheel, and they also have the effect of when times are tough, more people sign on to be drivers because they need extra money, which allows them to actually lower rates because there's more drivers than maybe they need at a given time. So they can kind of lower costs, which then brings more people onto the app because it's like, oh, hey, now it's more worth it to Uber where I need to go. So they kind of have some things that insulate them during tough times and to be able to basically maintain their take rate and not take too much of a hit. I also think that people are willing to pay for a business that produces solid free cash flow and is continuing to push that top line up with very consistent gross margins. Uber is one of those companies where if they get somebody on their platform spending money, they tend to continue to spend money regularly over a long period of time. People get on there and they order their first Uber Eats or they hail their first ride from the airport, whatever it is, and then they tend to kind of keep doing that periodically. It doesn't really take a whole lot for people to see the convenience of this app. So you have that, and then you also have the fact that they keep their gross margins very consistent, and since the revenue is somewhat sticky, it makes sense for them to want to do what they need to do to get more people through the door and getting into the habit of using Uber. And some of those people maybe sign up to Uber One. Uber One is definitely not quite on the level of, say, like an Amazon Prime or something, but I do think there is some potential there for high quality recurring revenue. So you add that in, you add the fact that they're not like really super expensive, the fact their gross margins are very consistent, and the fact they're still driving revenue up. Of course, people are going to look at this and say, hey, this looks pretty good here. When a lot of other stuff, they're spending a ton on CapEx. The free cash flow is not maybe looking quite as good as what Uber is doing, or at least the multiple of it isn't as good. And, people I don't think are quite as afraid of, oh, what if the AI CapEx spends or doesn't work out? They don't. I mean, they do say that Uber is going to get disrupted by robo taxis or whatever, but at the moment, I don't think we're seeing that reflected in the numbers that Uber is producing. And granted, you can actually hail a Waymo, which is seems to be the one that's the furthest ahead in the robo taxi game. You can hail them on Uber's app, and they do get some take rate from that. So it's more of a partnership there on that, and not so much of it's replacing Uber. So I think we're in pretty good shape here. And of course, they've got their Uber Eats, etc. So there's a lot of good things going on with Uber. The other aspect I think that's possibly working in their favor is a relatively low balance sheet or debt risk, basically. So they do have debt on the books, but this net debt number basically takes the debt, but then adds back in things like cash and short-term investments, etc. And basically evens out, like if they used all their cash and and all like the say like 90-day treasuries or whatever else they hold in short-term investments, and then threw it at the like cash value at the debt, what would they be left with? And they would be left with like a net positive 647 million, according to the stock analysis data feed here. And this is probably pretty close, but it could be a little bit different by now, because this is obviously from whatever it was on the last earnings. So suffice it to say, though, that they have basically enough liquidity that they could pay off all their debt and still have like some money left over, basically. So they're not sitting there with a tremendous amount of debt that would be in danger of putting them under, or that they would be in danger of not being able to service. So I think things like interest rates, etc., aren't something that should really be like a huge worry for people who have Uber, because obviously like that's a big thing on people's minds still this year. People think that some of the tariff stuff is to cause some short-term pain in order to get the Fed to cut rates, etc. Regardless of what happens with rates, I think Uber isn't really like they're not really very exposed is basically what it comes down to. So that could possibly also be helping them kind of stay in the positive price-wise so far this year. It's just when interest rate stuff happens, I don't think the first thing people think is, oh crap, I better sell out of Uber because rates going up or not going down or whatever would hurt them so bad. Now, if you're into something that has like a ton of debt, like a Verizon, or I think like an AT&T, or Warner Brothers Discovery, I think has quite a lot of debt. Though that when interest rates either go up or fail to go down, or that kind of thing, like I understand why those stocks kind of take a hit, but something like Uber, they have a relatively clean balance sheet, all things considered. So I think that probably also just helps risk-averse investors stay pretty cool and calm like a cucumber. If you have Uber, I would encourage you to comment below and let me know how satisfied you are with the holding and its performance so far in 2025. And if you feel like you're a holder for the long term and you're not worried too much about robo-taxis, etc. Also, make sure that you like and subscribe. Help me out with the algorithm, help me grow the channel. Catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live, to discuss stocks in real time. My Discord is, of course, linked in the description. You can always catch me on there. I like to interact with the community. Also, just remember, take care of yourself. Don't spend all your time refreshing your account and stressing out. It's not worth it. You got to take care of your health and your well-being before anything else. Take it easy, everyone.